If you are still adding indicators on top of indicators, you are going to keep blowing your account. I know, because I did the exact same thing for 2 years. Today I am giving you the one strategy that finally made me consistent, completely free, no paid tool required. It's called MS-SNR, Market Structure plus Support and Resistance. And by the end of this video, you will have everything you need to trade to yourself. I'm going to break this down step by step. How I read market structure, how I mark my zone, how I enter with precision, and how I manage my risk. No fluff. Let's get into this. MS-SNR stands for two things: market structure and support resistance. These two concepts alone, when mastered, tell you everything you need to know about where price is likely to go and where it is likely to react. Here is the key principles behind the strategy. Price respect every structure. Every move in the market is a reaction to some form of structure, either a level that was support and become resistance, or resistance that becomes support. Our job is to identify those levels and wait for price to back to them. The strategy has three phases. Phase 1, read the market structure, and phase 2, mark your SNR zone, and phase 3, wait for your entry setup. Simple, repeatable. Let's go deeper. Let me talk about market structure, because this is where the most traders go wrong. When you hear market structure, most people think about the big picture. The long external swings, the major high and lows drawn on the daily or weekly chart. But that's not what I use. I use internal live market structure, not external. Why? Because internal market structures show you what price is doing right now. It reflects current market behavior, current momentum, current intent. External structure is the old story. Internal structure is the live one happening in front of you. So, when I pull our chart, I'm not drawing big sweeping trend lines across months of price action. I am just identifying the most recent internal swing high and low, the structure that is actively performing and actively being respected. In a bullish structure, a price is making higher high and higher low. In bearish structure, price is making lower low and lower highs. A break of internal structure swing that we call a market structure break tells me momentum has shifted. That's my signal to start looking for a new zones in the new direction. And once I have my structure read, the next step is to mark my zones. A zone is a price area where I expect the market to react. I combine market structure with SNR to identify these areas, and there are 5 specific type of zone I look for. Before I break this down out of these 5 zones, I'm about to show you which one do you see working best on your site right now. Let me know in the comment below. I read every single one. RBS, this is a level where price previously struggled to break through. It was a ceiling. Once price finally breaks above it, that same level flips and becomes a floor. When price pull back to that level, it becomes a high probability zone. And let's talk about SVR. SVR stands for support becomes resistance, the opposite of RBS. SVR is a support become resistance, a level that held price up multiple times, then breaks down. When a price rallies back up to that level, it now acts as resistance. And let's talk about Apex, QM and DQM. Don't worry about these SNR zones. I will show you exactly in the trading view also. First, let's talk about the theoretical part of our strategy. And the zone type 3 is Apex. Apex zone is a final compression area before an explosion. When price break aggressively away from that compressive structure, the breakout origin becomes a high probability reaction zone on retest. Type 4 is QM, Quasimodo. The Quasimodo is a specific price pattern that forms when price create a failed higher high followed by break of previous higher low or the inverse in a downtrend. What makes the QM powerful is that it traps trader on the wrong side. The false break creates trapped buyers or sellers, and when price returns to QM level, those trapped positions fuels the reversal. And the type 5 DQM, which is also called double Quasimodo. The double Quasimodo is simply 2 QM patterns forming at the same general price area. This simplifies the significance of that zone. 2 rounds of trapped trader means significantly more pressure when price revisits. Now, let me show you 5 SNR zones on the trading view chart. Let's talk about the market structure. You can see market structure like this. It's breaking higher high and forming the higher low like this. And you can see this is the bullish trend, and let's draw the bearish trend also. You can see lower high, lower low, lower high, lower low like this. Let's talk about the market structure break. Market is going up like this and after it break this low, after it break this higher low, it becomes market structure break. After the market structure break, it becomes the bearish trend like this. You can see it becomes the bearish trend, it breaking the lower low here. So it's like this. Let's talk about the 5 zone. This is the market structure break, and this is the breakup structure. You can see all of the levels are the breakup structure here. This is also the breakup structure. This is the basic market structure. I will show you how to mark the SNR level here. And first, let's talk about the resistance becomes support level like this. Resistance level, after it break, it becomes the support like this. Market will retrace here and then it will respect like this. This was also the resistance level. After it break, it becomes the support level. Like this, market structure goes on. And let's talk about the support become resistance level. For the support become resistance level, market should be on the bearish trend like this. You can see market should be on the bearish trend. First of all, it was the support level. After it break, it becomes the resistance level like this. You can see this is the market structure. This is the resistance level, which is also called the support become resistance level. We already completed the RVS and the SBR. Let's talk about the apex level. After the market structure break, after the market structure break, we got the 2 point. This is the support become resistance level, and then this is the pointed, this is the high of this structure, pointed area, which is called the apex. Same goes in the bullish trend. You can see after the market structure break, this levels becomes the resistance becomes support level, and then this is the overall low of this structure. This is the pointed level, which is called the apex level. And what you can see, we got the 2 level when there is the breakup structure like this. You can see this is the resistance becomes support and this is the apex level. Same goes in the bearish trend. When the market structure break, we got the apex level and the support become resistance level. And if we got the like this market structure break like this, if the market structure is break and then it becomes the bearish to bullish, we will got the level like this. This is the first. Let's pull it here, and we can see this is the market structure break. This is the market structure break, and we got the 2 level for now. Let's see, this is the resistance become support level and this is the apex level. And now we got the another level also in the market structure break. This level is called the QM level. And what you can see here is when this market structure break form, we got the first, this is the resistance become support level and this is the apex level, and also we got the QM level. These 3 types of level. In the bearish case, you can see same goes like this. Market was on bullish trend like this, and it formed the bearish trend by the market structure break. Then we got the 3 level, and we got the 3 level. This is the support become resistance level, and this becomes the QM level, and this becomes the apex level. We already covered the RBS, SBR, and QM, and also the apex level. Now let's talk about the last, that is DQM. Let me clear the chart for now, and I will show you perfectly how the DQM look like. As we know, this is the bullish structure like this. Market is breaking the higher high and it forming the bullish breakup structure, and we can see there is the market structure break. Market structure break is happened here, but it's not respecting this market structure break, and again it formed the another market structure break like this. And we can see this is the market structure break, And as I already told you, this is the resistance support become resistance level like this, and then this is the QM level, and then this is the apex level for now. And then market, as you can see, market did not respect this level, and again it formed the break up market structure break on the opposite side, you can see like this. And we got the one level like this and another level which is not respected yet, and then another level here, and again there is the another level which is the apex here. Because for this market structure break, this only market for this only market structure break like this, you can see this is the apex level. So let me name this level all. This is the first, it was the apex and working as a resistance, and the resistance become support level, and it forms the resistance become support level, which is the RBS level. And first it was the QM level, and then market again break this level and it formed the DQM level, double QM level, you can see like this. This is the exactly DQM level. And you can see for this, you can see, let me draw you like this. For this structure, this level becomes the QM level, so we can mark this level as a QM level, and the, as you already know, this is the apex level. And let's see on the bearish case. In the bearish case, we can see market is going like this, bearish structure forming like this. It forms the bullish market structure break, but it did not able to respect from this level, so it finally break this level and it formed the again market structure break here. So we got the level like this. First it was the support, and it break by this market, and it becomes the resistance, so it becomes the SBR level. And we can see it is the already DQM level, and it is the QM level, and it is the apex level. You can see it is the bearish scenario. I already show you the bullish scenario, and this is the all about the zones and the market structure. And let me show you in the bigger picture also. This is the complex market structure which is covering all of the 5 zones here. You can see, you can analyze by learning this DQM, RBS, QM, apex, and you can screenshot this page and you can analyze your own understanding also. And let me show you in the real market. When the breakup structure form, we will go get the 2 level like this. This is the first, it was the support level. When it break, it becomes the resistance, so SBR level, and we got the apex level. And the idea to mark the zone is you have to mark the wick like this. You can see this is the longest wick here, and here it is the wick here like this. Mark the wick as a zone, and you can see there is also another break of structure like this, and we will get the 2 level like this. This is the first support become resistance level, and this is the apex level like this. I'm marking only the wick here. And now you can see again there is a market structure break, and then again there is a market structure break also here. You can see there is the market structure break, so we will get the 2 level like this. This is the support become resistance level, and this is the apex level. You can see this is the longest wick, so mark the longest wick. And you can see, first of all, it was the bullish breakup structure like this, and it formed the market structure break here, and then in the market structure break we will get the 3 level like this. This is the apex level, this is the apex level, and this is the QM level, and this is the support become resistance level. You can see QM and the apex level is respected huge, and I also took this trade in the morning. And you can see there is a lots of market structure you can mark like this, and also it can form on the here like this. And let's draw the zone here. You can see this is the, first of all it was the resistance, and after it break it becomes the support, and then it is the apex level like this. Let's mark the zone, and you can see apex level is perfectly respected and it flew high. This is the market structure. This is the zone marking and the structure marking on the candlestick live market. I already show you the QM, SBR, RBS and the apex. Let me show you the another example also of the DQM. And you can see there is the market structure. This is the breakup structure, and it formed the market structure break after breaking this low, and again it formed the market structure break like this. You can see here. So we got lots of level here like this. You can see this is the support become resistance level, and after the market structure break this becomes the QM level, and this is the apex level. You can see this is the apex level. When this apex is broken, this level becomes the resistance, becomes support level, and this is the DQM level respected like this. You can see, and then again we got the this QM level, and then this apex level like this. You can see we got altogether 4 zone here. This is the resistance become support level, and this is the QM level. This is the DQM level. This is the DQM level. This is the QM level, and this is the apex level. So this is the this is all about the market structure and all of the SNR zones that I use. We have a rule that is absolutely non-negotiable. Look at this closely. If a higher time frame candle closes through your zone, that zone is invalid. Game over. Just delete it. But the wick doesn't invalidate it. Why? A wick is just a test. The market probed the level and rejected it. A close means acceptance. The market has accepted a new price. Don't sit and hope a closed through the zone will still hold. Move on. Find the next valid zone. Let me show you the example. There is a breakup structure like this. It was a bullish trend, and there is the breakup structure. We got the 2 zone like this. This is the first resistance, and it becomes a support here. When these zones break by this candle, just delete this zone and look for the next level. We have the apex level like this. This market goes from the QM level like this. We can see this is the QM level, and then QM is perfectly working here, and this is the example of the close and invalidation of the zone. The zone becomes invalidate when it closes by the candle. That's it. And the sweep of the zone doesn't mean it is invalidate, and the sweep of the after the sweep of the zone you can also take trade, and it also becomes the high probability, but because it already took the liquidity of that zone. So don't hope for the market reverse after the zone close, but we can take trade after the zone sweep. For the time frames, I always work with the 2 time frame, a higher time frame for analysis and zone marking, and a lower time frame for entries. The higher time frame tells me the story. The lower time frame tells me exactly when to pull the trigger. Pick one combinations that match your schedule and stick to it. You can see there is the daily and 1 hour time frame. Daily is a higher time frame, and for the NT confirmation look at the 1 hour time frame. And like this combination, I generally use the 15-minute and 3-minute combinations, which is good for the intraday. And I suggest you for the intraday, you can also choose 15-minute and 3-minute time frame, and also you can choose the 5-minute or 1 hour time frame. You can choose any time frame as per your wish or as per your time. Let me add a layer that makes this strategy even more powerful. FVG, fair value gap. A fair value gap forms when price moves so aggressively in one direction that it leaves an imbalance behind, a gap between candles that market didn't efficiently trade through. Here is how I use FVG as a filter. If my zone is in the direction of an FVG, meaning price is likely to fill that gap towards my target, that invalidates my setup. If there is an FVG sitting between my zones and my target, that's a warning. The market tends to fill FVG, so it might stall my trade there. FAG doesn't trigger my entry. They validate or challenge my confidence in the setup. Let's see on the chart. Here, there is the breakup structure, and we can get the level like this. Let's mark the level like this. This is the example. Let's just mark this level, and you can see when market come at this level and it gives the rejection hues, but it's from the FEG here. So if you got the FEG on the opposite side of our entry, like we are going the bullish trend, but the FEG on the bearish, so ignore this. Wait for the FEG to complete its work, like market to touch at this FEG, and then it have to sweep the low. Then this FEG is completely filled. And another case is if FEG is broken like this, then take the trade. In this situation, it's working from this FEG or 1 hour FEG. Just ignore the 1 hour FEG. We do not have to filter lots of trade here. For now, just choose the FEG which you is a higher time frame. Like I choose higher time frame as a 15 minutes, so I look for the 15-minute FEG. If you choose the 1 hour as a higher time frame, you have to look for the FEG on the 1 hour time frame. This is the FEG case. Let's talk about the entry. Alright, you have read the structure. You have marked your zone. You have waited for price to pull back into their zone. Now we need a trigger. I use a strong engulfing candle on the lower time frame, and I want to be specific about what strong means. Criteria 1. 1-to-1 candle engulfing. The entry candle fully engulf the previous candle body to body. And the criteria 2. Greater pressure in the direction of your trade. If you are looking for a long, the bullish candle must be bigger and more powerful than anything happening around it. And the criteria 3. At least a medium wick on the entry side. A bullish engulfing with a lower wick means price tried to go lower, got rejected hard and close out. That wick tells the story of trapped seller. I also have a custom indicator that filters these engulfing candle conditions automatically. It highlights exactly the candle that meet all the criteria. If you want access to this, join my Discord server. The link is in the description. Once the candle closes, not mid candle, but once the candle fully closes, I enter at the market. I wait for confirmations, then execute immediately. And this is the indicator. Let's show you the example here. Let's go to the 3-minute time frame. On the 3-minute time frame, you can see there was the FEG here. It forms the white candle here. White candle is for the bullish confirmations and black candle for the bearish confirmations. Here you can see it forms the white candle here. But there was the FEG. Then this filter out the low probability trade for me. So I did not took this trade. This is the QM level which I mark, and then I waited for the market to enter at market to reach at this level, and I went to the 3-minute time frame. On the 3-minute time frame, we can see there is no any setup, but here we can see it forming the black candle, and it meets all the criteria that I already said you. And my entry will be the after the closing of this black candle, and the SL will be the high like this. And this is the zone that I marked already. This is the QM level, and then I got the 1:3R. You can see all the trades that I took on the Discord channel, and also I make the trade breakdown video. You can also watch the other video also to get the idea about these entries. Let's talk about the one of the big thing, risk management. I know risk management sound boring, but if you skip this next 2 minutes, the strategy I just taught you will literally zero out your account. Listen to this. My stop loss goes at the pullback high for short trade or pullback low for the long trade. That high or low is the structure level that, if broken, means your analysis was wrong. Don't compress it. Put it behind the structure. I use a 2-part TP structure. First target 1:1.5 RR. This is where I move my stop loss to break even. Free trade, no stress. Final target, that is 1:3 RR. This is a full TP. I just put my trade into break even at 1:1.5 RR, but I take the full take profit on the 1:3 RR. Risk a fixed percentage of your account per trade, 1 to 2% maximum. Discipline in position sizing is what keeps a losing streak from becoming a blown account. Now, let's talk about the psychology. I want to say something directly to anyone watching this who is in their first few months of trading. You will struggle at first, not because the strategy doesn't work, but because discipline is a skill that takes time to build. If you practice this strategy consistently for more than 6 months, marking zone, waiting for pullback, taking only valid trades, you will be profitable consistently. But most people won't make this 6 months. They will widen their SL on one time because this one feels different. The strategy is not the obstacle. Your mind is. Here is how you build the discipline. Journal every trade. Only take a A-grade setup. Missing a trade costs you nothing. Forcing a trade can cost you real money. Accept losses or stop out trade that follow your rules is the cost of doing business. Let me put this all together with a real example. If you want to see me take trades like this live, step by step in the real time, I do that exclusively in my Discord. Link is in the below description. Step 1. I pull up the high time frame chart. Internal structure is bearish. Lower highs, lower lows, looking for short only. Step 2. I identify my SNR zones. Here, I have a SBR, a previous support level broken. Price has rallied back to retest it. Step 3. I check the FEG. I drop to the lower time frame chart and watch price to pull back into the zone. And step 5. Price enter the zone. I see a strong bearish engulfing candle. Full body engulf, upper wick, dominant pressure, and the candle close. And step 3. Execute at the market. SL at the pullback high at 1:3 and break even at 1:1.5 RR. And step 7. If my trade moves up to 1:1.5 RR, I move my SL to break even. And step 8. If my trade hits 1:3 RR, I close the trade. That is MS-SNR strategy from start to finish. This strategy is free. You don't need a paid course. You don't need a single service. Everything I have shown you today, you can implement starting right now. What you do need is time, consistency, and the willingness to do the boring work of marking zones and journaling trades day after day. If this video helped you, drop a like. It genuinely helps the channel reach more traders. Subscribe if you want more content like this. And if you want to see exactly how I find these zones in real time, watch this video next. I break down a live trade using this exact strategy. Drop any question in the comment. See you in the next one.